it was a creative deal right out of the get-go on it. Also, we think very, very conservative with how they dialed in the synergies, too. So, we actually see we had Diamondback trading at 6.6 times 19 EBITDA. Energy, and they bought at 6.4. You throw some synergies in there, it's actually gets the combined pro forma company 6.2 times on 19. So it works on valuation. More importantly, it's a huge boost to Diamondback's inventory. We now see them with 16 years of really tier one great drilling post this deal. If there's any weaknesses in Diamondback's game prior to this deal, it was depth of inventory, in our opinion. So that kind of solves this problem. Makes a ton of sense. I think this is going to be the premier go-to large cap name in the E&P space. They'll just really kind of just run circles around their large cap peers in terms of growth, returns, et cetera. So we like it quite a bit.
Does this deal signal sort of the turning of the page on the second chapter or second story of the Permian? In a sense, what I mean is for years, production was going up, and everybody's goal was to try to get organic production costs down, reduce their break-even point to 30, 40, 50, 60, whatever it is, bucks per barrel. We're hearing now more and more CEOs say, I can't bring costs down anymore like that. What I need to do is get bigger, get scale, and cut costs that way.
Yeah, we're hearing more of that too. I think there probably is some more upside associated with just pushing costs down. The industry's been magnificent on that front. But like a deal like this, I mean, the Permian right now, it's almost been a victim of its own success. They've grown production so much that it's a knife fight for services, for space on pipeline, et cetera. So you could consolidate out here and kind of work costs down from that angle and draw from the benefits of scale. Makes a lot of sense.
More deals coming? Is there still good rock out there, good acreage?
Yeah, it's interesting. I think we all kind of called for, more M&A, more corporate M&A. The big deal before this was Concho in RSP. What we've been hearing here recently is that a lot of these private equity-backed guys are now kind of crying uncle as well, because the differential out there, the price they're getting for their crude, it's substantially lower. It's $15 off Midland for next month. That's hurting their economics. So if they could pair up with somebody like a Diamondback and say, hey, listen, we'll take your stock now. We're not going to be as greedy on the price. Let's make something happen. We think there's going to be more on that front first.